The Wall Street Journal came out with an article on April 6th, and it is titled Warren Buffett's Death Spiral Deal. This is his deal with Occidental Petroleum for the preferred shares that he owns that they owe an 8% dividend on. And in the article, they say Warren Buffett wouldn't stoop to a borderline legal financing technique associated with penny stock financiers. And yet, while it was never his intention, Berkshire might wind up with a chunk of discounted Occidental shares in a pattern similar to so-called death spiral financing. So in this video, I'm going to explain what that means, and I'm also going to explain how that can affect current shareholders to Occidental Petroleum if Warren Buffett gets his preferred dividend in shares instead of cash. Now, to understand the Occidental deal, I want to do an overview of how they got into this deal with Warren Buffett. So to do that, you don't have to go too far back. It may seem like a long time ago, but it wasn't even 1 year ago when Occidental made a bid for Anadarko Petroleum. And they did this after Chevron originally made an offer for Anadarko. So they outbid Chevron to do this deal. Now, this was back in April of 2019, and Chevron made an offer of about $33 billion for Anadarko Petroleum, and Occidental came in a lot higher and bid $38 billion. Now, just keep in mind that before any of this bidding started, Anadarko was a lot lower. So once the bidding started and the deal finally closed, they had a premium of about 56%. So that means they were somewhere around $25 billion market cap, and this bidding war bid them up to $38 billion. And also, since Chevron had their offer first and it was in the works, there was a $1 billion breakup fee that Anadarko had to pay to Chevron in order for them to go ahead to Occidental's higher offer. So to explain a little bit of how that works, it looks a little bit like this. So Occidental at the time was a $44 billion market cap, and they were trying to buy Anadarko for $38 billion. So roughly the same size, one fish eating roughly a same size fish. Chevron, on the other hand, was $230 billion market cap, so about 5 times bigger than Occidental, trying to eat Anadarko, which was also roughly 5 times smaller than Chevron. So Oxy couldn't swallow Anadarko itself without outside help. So Berkshire Hathaway came in, which is a $530 billion market cap at the time, more than twice the size of Chevron, and bought $10 billion in preferred stock from Occidental with an 8% dividend. And that enabled Occidental to go ahead with the Anadarko deal, and Chevron bowed out and took their $1 billion in cash for their troubles. So a pretty nice deal for Chevron, I guess, especially looking at it a year later and seeing the oil market and the oil business and the oil landscape where it's come now with this whole coronavirus stuff. So let's look at the Berkshire deal with Occidental. So Berkshire receives 100,000 shares of cumulative perpetual preferred stock. And what that means, cumulative, means that if Occidental can't pay you this quarter or next year or for 2 years or whatever, that adds up. It doesn't mean that, hey, I can't pay you this quarter and so I'm not going to pay you. No, you owe it, and it keeps getting accrued until they can pay. Or if they cannot pay, he also made a deal that they will have to pay him in stock with a 11% discount to that current share price. So that means that his dividend yield effectively goes up to 8.9% from 8%. He also negotiated warrants to buy up to 80 million Occidental shares at $62.50, which was about a $10 discount at the time when this deal was made. Now, Occidental is currently around $15, so who knows if it's ever going to get above $62 for it to be worth it. But this warrant lasts for 11 years, so he has 11 years for this thing to turn around to exercise these warrants to buy his 80 million shares of Occidental. Now, although Warren Buffett liked this deal with Oxy and them buying Anadarko, Carl Icahn, another multi-billionaire, wasn't too happy with the deal, and he's also an Oxy shareholder. And here's what he had to say about it. He said, Buffett took advantage of the CEO who admitted to having very limited merger and acquisition experience. And he said, Buffett figuratively took her to the cleaners, adding, the deal was like taking candy from a baby. So he wasn't too happy with this deal. And Carl Icahn, I mentioned him in the Bill Ackman video I did. He was a buyer of Herbalife while Bill Ackman was shorting Herbalife. So he's also in the news as well. And he's been trying to shake up the Occidental board, getting his own board members on there and stuff. So he's also in the mix on this. And not only that, but Barron's also did an article estimating that Occidental could have issued their preferred stock at about a 6.5% rate on the open market, and they wouldn't have to give away those warrants, which are now worthless anyway right now. But even so, that 6.5% versus 8% is a difference of $150 million a year, so nothing to sneeze at there. So fast forward to today, let's see how these death spiral deals on these penny stocks work and how it's going to work with Occidental. So in a penny stock deal, they don't have easy ways to borrow money, so they do these deals where they have these convertible bonds that convert into stock, not at a set price, but at wherever the price is at the time when you're supposed to convert it. So if you have $1 million that's going to convert, you lent this company $1 million, and they say in 1 year you can convert that $1 million we owe you plus interest into stock. Well, if the stock price is about $15, you're going to get 66,000 shares. If it's $10, you're going to get 100,000 shares. So if the stock price is $15, and these penny stocks never are, they're usually just that, pennies, 10 cents, 50 cents, 60 cents, whatever. But if you're the person lending the money, okay, it's in your interest to short the stock before you convert the money you're owed into shares. So if it's $15, you want to short it because at $15 you only get 66,000. If you short it at 15 all the way down to 5, not only are you short a whole bunch of stock on the way down that you're making money on, but you can get 200,000 shares to cover your short position, to completely cover your short position, so you make the money on the short and you can get long as well at a cheaper price. And so that's where the death spiral is, that it's in the interest of the people that lend these companies the money to short these stocks, and the more they lend them, the more they short the stock, because they're collecting more and more stock the cheaper the stock gets. So think about it. If the stock got down to a penny, you'd be having whatever, tens of millions of shares. And so if you shorted it all the way down, you would make a lot of money doing that. So now, obviously, Warren Buffett is not doing that exactly, but it's a little similar. He's not going to be shorting Occidental stock for sure. So let's look at Occidental. So the dividend, the yearly dividend is 8% on 10 billion. That's $800 million a year in preferred dividends. And now add to that the 11% discount that he charges them if they pay him in stock instead of cash. And so that comes out to $222,500,000 in stock that they have to pay him per quarter. So if the stock price is $15, then he's going to receive 14,800,000 shares approximately. And considering that there's 893 million shares of Occidental outstanding, that would be 1.66% of the outstanding shares of Occidental that he would receive in 1 quarter at $15 a share. So in 1 year, if he converted all of his dividends into stock at $15 a share, he would own approximately 6.6% more of Occidental. And at these levels, at the same thing at $10, if he did that for a year, he would have 2.49% times 4, or about 10% of Occidental stock. Same thing at $5 for a year, it would be 5% a quarter, or 20% in a year. I don't think it's getting down to these levels, but just to say, at $15, if it stayed at $15 for a year, like I said, he would have 6.6% more, and he already owns almost 19 million shares of Occidental, which is about 2.1%. So in 1 year, if he converted his quarterly dividend at the stock price of $15, he would almost own 10% at the end of 1 year, which would make him, a large majority share owner of Occidental. And again, just like Delta, if you get above 10%, he would have to start reporting within 2 days any purchases or sales to the SEC, and that's public information. So what does this mean for Occidental shareholders? Well, you're going to get diluted because they already cut the dividend, 76% or something like that, 86%. I did a video on the Occidental dividend cut. And so the dividend is now like 11 cents for regular shareholders. But preferred shareholders like Warren Buffett gets paid first. So if anything, they would cut the regular shareholders' dividend to zero to try to pay Warren Buffett's preferred dividends first. But it seems like they are going to announce that they're going to pay his dividend in shares instead of cash to preserve cash. So what that means is that if Occidental stock stays around $15, shareholders will have their shares diluted by about 6.6% a year. Just means you're getting a smaller piece of the pie every year, just holding your shares. So not a good thing, not very positive in terms of when their regular dividend is going to go increase or go back up anything close to the previous level, when they're still paying Warren Buffett out in shares instead of cash. So that's my video on this so-called death spiral deal that Warren Buffett has with Occidental, and how it would affect you as a shareholder, how you would get diluted. The lower the stock price goes of Occidental, the more quicker you will get diluted in the shares that you own. So once again, Warren Buffett always makes a great deal for himself and has all kinds of contingencies, and you know, the small investor kind of doesn't get to make those kinds of sweetheart deals. So like they say, if you can't beat them, join them. So if you want to be on the side of Warren Buffett making these kinds of deals, then just go and buy Berkshire Hathaway stock and you will be participating in these kinds of deals as well. This is not an offer to buy or sell Berkshire or Occidental or anything. This is purely educational. Make your own decisions. So I hope you liked this video. If you did, give me a thumbs up. Let me know if you're an Occidental shareholder and if you are going to continue to hold, or you do not want to hold because you do not think that the dividend will come back anytime soon. Also, if you haven't subscribed to my channel, please do so, and thank you for watching.